He campaigned on it and has talked about it since taking office. So why did the market pull back late last week over President Biden's plan to raise taxes? A look under the hood of the president's plan on today's Fastest 4 Minutes in Finance. Hello again, I'm Scott Inman. As we record this on Wednesday, President Biden is scheduled to officially unveil the details of his American Families Plan in a speech to Congress tonight. The markets retreated late last week when those details started to emerge. The headline here is that the plan would raise taxes on personal income, investments, and inheritances to levels not seen since the 1970s. And that spooked investors, at least for one day. So here are the specifics. Americans earning over $400,000 would see their marginal income tax rates increase from 37% to 39.6%. Americans making $1 million or more will pay more on capital gains taxes to the tune of 43.4% when combined with the 3.8% net investment tax already on individuals making more than $200,000. And that's around twice as much as they pay now. It would be the highest rate since before World War II and the highest currently in the world. The president is also expected to propose eliminating a provision that currently benefits those who inherit assets. Right now, if you inherit assets, let's say from a parent who dies, you would receive a step-up in cost basis. In other words, if you turned around and sold that asset, the cost basis would be the value of the asset when you inherited it, not when your parent bought it. That's a provision that does not only benefit the super rich. We've seen it, quite frankly, benefit Arkansans who are not millionaires and made their retirements better. The S&P 500 dropped slightly on the details of the president's plan last week. However, one hedge fund manager told Reuters that it would have dropped 2,000 points if the plan had a chance of passing. That's because passing this large of a tax increase will produce a fight not only with Republicans, but with some Democrats as well. Listen to this. The states with the most millionaires are California and New York, and they are largely represented by Democrats in the House. California and New York have their own state capital gains taxes, and some cities even impose capital gains taxes. In New York City, for instance, combined with state and local taxes, a high earner could face a 58.2% capital gains tax. That could be a hard sell for those lawmakers. And some of those lawmakers have already demanded that one tax break that was eliminated during the Trump administration be reinstated. President Trump's tax plan that largely did decrease taxes also limited the amount of state and local taxes you can deduct from your federal taxes to $10,000. And that hurt high earners in high tax states the most. California and New York Democrats want that cap removed. Combine that sentiment with the fact that some Democrats, including moderates like West Virginia Senator Joe Manchin, are on record now saying they want to limit the size of the tax increases. The takeaway here is that this is likely just the starting point for the Biden team to begin negotiating for higher taxes. And the fight is not likely to be over soon, meaning any impact on the economy will not likely be felt in 2021. That's this week's Fastest 4 Minutes in Finance. Thanks for watching.